Welcome back, Alpha Hunters. Hope you guys had a great Thanksgiving and you are full and you're coming back from your naps. Still got to do the homework, still got to see what the market is trying to do as we prepare to go into next week. So let's check it out. So the market definitely did it. I mentioned in last week's video, I could see a situation where the market falls asleep this week. We would kind of run up and take out the high we put in from last Tuesday. And the market really did it. It was a really light volume week. Even on the dailies here, Monday, Tuesday, Wednesday was the full days of trading. Friday was a half day of trading. So we definitely did get up there. So we'll take a look at that and kind of how the market interacted once it got up there. But you can see market on Monday had a little bit of a gap down, not too much, traded lower a little bit, kind of checked in to some of the moving averages, and then kind of flattened out and just kind of ended even with where it opened on the day on Monday. Tuesday opened higher, traded lower, and then it just pushed higher the entire day. It just kind of got into a little zombie mode and just wandered into the bullish direction as it was getting full on turkey. It just kind of was not unexpected. It happens a lot on Thanksgiving week. Yeah, people just go out of the office for the week, and most of the time, if people are going to be out of the office in trading weeks where there's holidays or something like that, expected to be bullish. And it just continued into early Wednesday. We made a run up in the first hour, got to this line right here. Don't worry about this lower blue line. This top blue line, kind of where we got flat for the rest of the week, is the high from last Tuesday at the 402.31 price level. Okay, so we came up, we hit it, and I said, be careful. There will probably be a lot of bots trying to sell if we got up there and try to take that out. And that was kind of what we got. We got up there. We didn't close above it. We had a hard time staying above that level. We got a pretty good snapback. We kind of just hung out until we got the Fed minutes that came out in the afternoon, 2 p.m. Eastern on Wednesday. And we got a little bit of volatility that came in. But you know what? We still didn't really break out. We didn't really break above last Tuesday's high. We just kind of had some upper wicks. We kind of just hung around that last Tuesday high. And we actually did close above it on Wednesday, but we didn't really, I wouldn't say we really like closed above it. Like we were just kind of right on it, just a few cents above it, not really a big breakout or anything like that. And then Thursday, the markets were closed. Friday, they came in, opened a little bit down. I would say a lot of that had to do with Apple, the report off of Apple, about some issues with Foxconn, their main supplier in China, one of their factories, and some of the issues there with some of the employees. So that kind of opened the market down a little bit. Traded higher, but again, had a hard time up in this zone, up above that last Tuesday high, and just could never really break above it. And we actually on Friday never broke above Wednesday's high. The Wednesday high right here in the afternoon on this red candle wick. We actually got pretty close right here at 11 p.m. Eastern, but never fully took that out. And then definitely not really sure of what the close was on the SPY for Friday, but it was right around the last Tuesday high, around the 402.31. I think it was actually a little bit above it, around the 402.33 is also what the broker said. That's what it was here on TradingView. So I think that's where it is, even though if you actually look at the chart, it's not where it actually happened. I think it came in on the chart at 402.27. So yeah, a little slippage there, not a big deal. So let's take a look at some of the other things we've been kind of watching in the marketplace over the past few weeks. And what we could see really from the Qs, man, it did not even get close to that last Tuesday high. It's really been struggling to kind of continue to push higher. A lot of that kind of driven by Apple on Friday. Apple seen here having that big kind of breakdown. And we definitely have a lower kind of pennant pattern kind of forming here, or descending triangle. Definitely watch these lows. We'll come back and talk about Apple a little bit later, but around the 147 level, basically the low of Friday or the low of Tuesday of this week, we start to really kind of close down in this level, probably going to continue to just be bearish on AAPL. But the Qs, yeah, obviously they've been just weak here. And then if you take a look at the IWM, they are also not getting back to last Tuesday's high, really not even close. They look very much like the Qs actually. And then DIA, the Dow Jones Industrial Average, yeah, still just pounding it higher, man. Just rocking out, bro. Killing it. Just absolutely killing it here recently. We'll look at a few other things to actually see where this is really coming from. But yeah, I mean, DIA is doing great right now. So let's check out the dollar, the rates, and that kind of stuff. So it would be really interesting to see here out of the DXY is if we actually did turn around, started to go bullish, took out this high right here around the 108 level, and continue to push higher. This would be very interesting to see because we would have a higher low here over the course of November, and maybe the DXY starts to push back up into the 110 type level. And how much pressure would that put on stocks? That'd be very interesting to kind of see. But yeah, we definitely got some selling to come back in this week, especially after the FOMC minutes were released on Wednesday. As far as the rates, the 10-year yield, definitely looking like it wants to break down that upper wick that kind of came in on Friday. So I wouldn't be surprised if it broke down, but you're going to have the 3.6 level right below it, which was a previous nice little support. I know we've been kind of consolidating right above it, and typically I don't like to see a consolidation right before a major level because usually that's enough kind of momentum building to kind of break through it. So we'll see if it's just a quick breakdown, gets into a zone where it gets bought back up and takes off. I'd also be willing to think that rates are probably going to start to fall going forward, or at least form a longer term kind of consolidation pattern, at least for now. And the inversion yield between the 10 and the 2 still just hanging down at these super low levels. And if you want to see how low of an inversion this is absolutely crazy. So I would expect definitely some snapback here as far as this, how low this inversion yield is, probably start happening relatively soon, probably as we go into the end of November and going into December. Okay, so let's then check out the GLD. GLD formed a nice little pattern here. This is kind of what I wanted to see earlier on. At least it kind of got in here and consolidated before it got all the way down to 160. So I would definitely say something like this. This is what you kind of want to see with the lower part of this point, probably checking into this 160 area. But that's looking pretty good. You definitely want to see a pullback. Nice little bearish flag pattern type setup, continuation lower, check into this lower level around 160, and then find the bounce and probably get back going, back to being bullish. I don't know how this would kind of relate to the gold futures. I think the futures would probably have to break this low that I just put in here a couple days ago. You know, it's not the end of the world if that happens. You kind of get maybe just down to 1700. It gets bought up and kind of continues going in the bullish direction. So taking a look at the HYG. So the HYG, we know this past week, if you were on the live stream, was definitely breaking out on Tuesday and Wednesday, getting above some of these recent highs that were put in over the past month or so. And this was another thing that was kind of mentioning last Friday in the Outlook video, was watch for the HYG and the VIX. We'll get to that here in just a second. Watch for the HYG to be breaking out and the SPY not break out above last Tuesday's high. Or if it does it barely and comes back down. So we saw that on the SPY where we barely got above it. I wouldn't say we really closed above it. We kind of closed right at last Tuesday's high. So I wouldn't really say it was a solid close above it. So the HYG here, at least getting above it. It's going to be really interesting to see what happens early this next week after the Thanksgiving weekend. VIX, this was the big thing to watch in my eyes for the week, okay? The VIX this week traded lower just about every day. On Friday, a little bit of a gap up. I think that had to do just with AAPL and that whole manufacturing mess and just kind of open a little bit higher. But we're getting back down into a level that has been a pretty bearish level for much of the year. That's typically when we see the little tops in the markets that we saw, back here in mid-August, early April. Those were big time tops in the market where we saw much larger rollover action kind of come out of the marketplace. Yeah, getting back down to this level doesn't mean it's all clear to go bullish. You know, that's just kind of what happens as you go into Thanksgiving week. There's just not much going on. So we did just see the VIX just absolutely fall off a cliff, get back down into this level that has been a huge pivoting level on the stock market. So it's going to be real interesting to see kind of what shapes out here over the next week or so. So I want to look at a few other things real quick. So I want to look at a couple of things, but real quick, I want to share with you something. I'm going to leave the link to this down in the comments below so you have it, or be in the Discord also. But basically, this is the Spider product line. So basically all the ETFs that they have, all the different products that they have. And really, this is just so you can have a uniform spot of, you know, looking up different sector stuff. You know, they have different sectors in here. That way you can kind of look up, you know, the XLC, that kind of stuff. All the different sectors, the different industries. One of the reasons why I do like this, or the way they kind of have it laid out, is I can be assured that there's no double dipping of certain stocks into certain categories. Sometimes when you use products from different, I guess, financial companies that they put out these ETFs, you don't really know if certain stocks bucketed differently or something like that. So this is kind of nice to have. And there's a few other reasons why I'm going to show this off, but the SPG, the SPV here, the value, or the S&P growth, S&P 500 value here. We're going to take a look at that real quick, but I'll leave a link to this down below, and it will be also in the Discord. So I want to show off the SPG here, divided by the SPV. Now, what's interesting to know here, what I did like about the SPG and the SPV here is they have data that goes back to 2000, okay? I didn't really find that with the others. So this is one reason why I do like looking at the SPY-G and the SPY-V. It's a real bummer. We can't really see what happened at the tippy top of the market back in 2000, but we can see kind of how that bear market kind of played out, right? We saw the growth stocks really get crushed. We saw the value stocks really kind of outperform. The way to kind of understand this little chart here that we got is if it's going up, growth is outperforming value, okay? And that's what the SPY-G is. It's basically the stocks that are in the growth area. The SPY-V are the stocks that are in the value area. So if it's going down, value is outperforming growth. So as you see in this bear market back in the 2000, 2002, well, value was definitely outpacing growth, mostly because growth is just getting hammered super hard. And we're going to look at these individually, okay? But I just want you to kind of understand where we are kind of in this longer term marketplace. Are we going to sell off now this hard on the value to growth kind of stocks? You know, this ratio going to come back down a whole lot harder? I don't know that for sure. You know, nobody really knows that, how much farther down we're going to go on the whole growth versus value ratio level, but it's definitely not looking like I would want to be tied to anything growth right now. And we're going to look at a few other things. Okay. So let's just take a look then at SPY-G, right? The growth side of it. Obviously, you know, it was definitely super bearish here. It was getting sold off pretty hard. And, you know, that's kind of what we've seen a lot so far this go around. We've seen the growth side of it get hit pretty good. So if we take a look then at the SPY-V, this is where it gets pretty interesting. The SPY-V, it was pretty flat. It wasn't, you know, there were some sell-offs back in the 2001 timeframe, but it wasn't super bearish right away. It wasn't until, you know, that 2002 kind of final sell-off to make the final bottom back in that time frame where the SPY-V really got kind of crushed, okay? So that was kind of interesting to see. And if you can see where the SPY-V is now, it really hasn't been crushed all that much as, you know, the growth side of it. So it's still hanging in there pretty good. I wouldn't really say that it's probably done. Maybe it gets one last push down lower. I mean, who really knows for sure, but just kind of interesting to see that. I do know one thing, okay? This is one thing I will say, is if we go look at a daily on the value stuff here recently, is the value stuff has been bought up so much over the past month, a little bit over a month, that I ain't touching it, right? We just got back to a pretty strong pivot level that we hit back in August, and it's just been on such a run that I wouldn't be wanting to be bullish into it now, okay? I'm not saying, you know, if we get a pretty good pullback or nice little rollover action here over the next couple months, couple weeks, that I wouldn't be willing to be long on some value stuff, but just understand that it's a little bit extended as for now, okay? So in looking at some of all the stuff that we've kind of looked at and taking that into consideration for what is kind of what I'm expecting kind of going forward, okay? So I'd say the market for the most part did, I don't know why this line's still here, I'm gonna get rid of it. I'd say the market for the most part this week kind of did what I thought. It fell asleep, it went up, it took out that high, but it didn't really solidly close over that last Tuesday high, which is at 402.31. So what I'm really kind of thinking here on the SPY, well, I'm not exactly bullish here, okay? A lot of that has to do with what we just saw out of value. Value, which has been leading the market, is basically pretty high right now. It's pretty high. And if we take a look real quick, let's go take a look at the growth. Growth hasn't really been breaking out, right? And even here recently, so far, got a little bit of a divergence, right? With the SPY making a new high here this week. We can see that the growth is clearly not making a new high. So take that for what it's worth. If we do see that the value buyers stop buying, we can definitely start to see some pressure kind of go down. So that would be the two things I would watch. I would say watch for value, watch for growth early this next week, see where some possibilities of selling come from. Because if we start to sell early this next week from a lot of these funds that had bots and trigger orders to sell as soon as the last Tuesday high, which was on November 15th, as soon as we broke above that to sell, if they really want it out of the market and, they see that we didn't quite get there, they're going to be watching this. If we have a gap down, or if we start to sell down the first 5, 10, 15 minutes, they might really come in and say, yeah, you know what? We really like this price level to get out of certain positions. And they might hit the sell button, really kind of start to push the market back down. So really kind of watch early this next week. The other kind of thing is, what if we just push higher through this level and then later in the week we roll back over and come back down? What would be really interesting here is we wind up breaking out higher, coming up, snagging a high, maybe getting to the 405 level, and then by the end of the week coming back down and getting below it. What this would kind of do is get a lot of people believing, oh, we finally got above 402.31 level. A lot of people would try to come in, buy it up, and then later in the week they would come in, sell it off pretty hard, and then probably continue the selling into the first full week of December and probably just start to get it back down to this 390 level. So those are the two scenarios I can really kind of see working out this next week. I think Monday and Tuesday are really going to be the tells, but I do think Monday we're probably going to get a tell really quick on which way the market's going to go almost immediately for the week. Are we going to push up and then roll over, or are we going to come in the market and a lot of the other big dogs out there that don't really want to be long, right? We've heard a lot of people saying, hey, the recession is coming in 2023. There's expect a lot of bearishness in 2023, first quarter or so, at least definitely the first half of the year. Definitely what I'm thinking as well. And then, well, if you are bearish or you're not wanting to be long in 2023, well, you got to look at the opportunities to possibly get out at some of these price levels and say, hey, you know what? I'm going to lock this in. I'm going to protect some capital. I'm going to go to a safe haven. And I don't feel like it's right now in the SPV or SPG because we're not really seeing any bullishness out of the SPG area, the growth side at all. So I would definitely be watching growth. If growth stocks really start to roll over and make some lows, yeah, it might be coming. I would definitely be watching value also. If we see some selling out of both of them, once both of those start selling together, yeah, the market's probably going to be toast. We'll probably just start making some lows. But yeah, definitely watch early on Monday. If we have a little bit of a gap down and we start selling right away, that might be it. There might be a lot of people that say, yeah, you know what? We want out at these levels. We don't want to possibly get out down here. We want to get out up here, right? So definitely watch out on Monday to see what starts to happen. So I did buy a few more puts on the position I have going out to June of 2023, and that's another very important part. do not be short-term expirations with your options position, okay? It doesn't matter which way you're leaning. If you're leaning bullish, cool. If you're leaning bearish, cool. It doesn't matter. But right now, we're about to be in a pretty choppy spot. I know a lot of people are calling for the whole year-end bull market rally, and we've already been on one since mid-October, so I don't really know how much of there is one left, right? We just saw the SPV has been on an absolute monster tear, right? And that's also kind of comparable to the DIA. And you know what? These are starting to be really, really crowded plays. And I wouldn't be wanting to buy up at this level. If it comes down and consolidates and then starts to push higher, yeah, I mean, I'm game for that here over the next couple of months. But I don't like how extended and how much of a run this has already been on. So I'm willing to kind of just say, hey, you know what? I want to see what a pullback at least looks like in some of these areas before I change my tone on possibly going from bearish to maybe bullish. But I do think it's going to be one of those situations here over the next couple of weeks as we go into December where people are going to start to look to next year and they're saying, hey, you know what? We are not bullish in Q1. I want out the door now. And I think people are going to try and jump out that door as fast as possible, and that door is only so narrow. So everybody trying to fit out that door at once, watch out for that, okay? But here over the next 2.5 weeks, really, I do expect some bearishness to kind of come in as people try to get out of some of the elevated levels that we've kind of got to on the market here recently. And in about 2.5 weeks, we are also going to get new CPI data, the CPI for November. And then we are also the next day, we are also going to get the FOMC decision about the last rate hike for the year and what they are going to do. Most likely it's going to be a 50 basis point increase, but we'll see if that possibly changes from any of the CPI data from the day before. So on Tuesday, December 13th, we're going to get the CPI data. And then the next day on Wednesday, December 14th, that's when we're going to get the FOMC to come out and tell us their last rate hike decision for the year. So I do think we'll be bearish up until at least that week. And then I think it'll be just waiting for the CPI data. I would expect CPI to come in lower than probably what the forecasters are expecting, kind of the trend that we had last month, or not the trend, but kind of what happened last month. And I would expect some pretty good bullishness that Tuesday. Here's the thing though, is then Wednesday, which anytime the Fed has talked this year, they've been very adamant of making sure the market is not bullish for any reasons. So I could see us pop really hard on Tuesday that day and then really drop pretty good then on Wednesday that day, or at least Wednesday that afternoon, after they announce their 50 basis point increase. After that though, once he gets to the press conference, then I would imagine we probably do see some bearishness. Now, one of the reasons why I went into a little bit more detail of what I'm expecting here over the next couple of weeks has a lot more to do with Mr. Brian M here. Kind of called me out last week and like, hey, what do you mean by kind of flat or whatnot? Kind of my game plan, right? Here in the next couple of weeks, I expect some bearishness. Then I expect that Tuesday, December 13th pop. And then the next day, December 14th, probably come in bearish or start trading bearish again. And then probably make a new low for December. And then it just kind of gets in and gets a little flat. I expect one solid bearish move here over the next probably 2 weeks. And then a pop, a drop, and then it probably just gets in and settles out then for the rest of the year as people try to diagnose the information and rebalance portfolios as they go into year end. And then all hell's going to break loose at the beginning of next year. But I do expect just one move and probably a flatten out, okay? So watch out for the activity in the marketplace early this next week. I think it'll be a pretty key indication for what's going to happen here pretty soon. But alpha hunters, I do want this channel to be about transparency and learning how to trade and do analysis for yourself. And basically, I'm just trying to be as transparent as possible when it comes to what I'm thinking. So Brian, thank you very much for calling me out last week for not really providing a valid analysis, kind of approach to what I'm thinking. And hopefully I'll just continue to do that going forward. If I don't ever do that, man, always feel free to call me out and I'll definitely try to provide more of that analysis. Alrighty, take care, alpha hunters.